Well, look, awesome to have you here. And I'm so curious actually how you got started. So I understand you were in the US Navy before, and
I was.
that led to you becoming an active real estate investor. And then that led to you becoming also a prop tech startup entrepreneur.
It's been a crazy journey. I'm not sure if every single thing led to another, but I did serve in the U.S. Navy. I was actually born in Russia, believe it or not. So I kind of grew up in Russia in the 80s, 90s, moved to the United States in the early 2000s, and then joined the U.S. Navy right out of high school, basically. So served there for about 6 years, mostly in Japan, actually. So I was forward deployed. And then once I was kind of transitioning out to a civilian career, that's how me and my wife got started in real estate. We were looking for different investment options, how we can kind of grow our wealth, retire early, and real estate seemed to be one of the kind of best choices for what we wanted to do at the time.
Anton, I'm curious, growing up in Russia and also being in the US Navy, did any of that give you a different perspective as a real estate investor or even as a entrepreneur?
Well, it's hard to say for me because that's kind of all I know. I sure the kind of growing up in a completely different environment, being in the Navy, uh, shaped my journey in some way. I would say maybe the most I got from it was kind of a lot of emphasis on hard work and discipline. Both kind of growing up in Russia, I wasn't like, we weren't super well off. We weren't kind of poor. We're kind of middle class, but both of my parents worked hard their whole life. My grandparents, obviously, in the military, it's kind of a lot of hard work. So I did learn a lot of work ethic, a lot of kind of self-reliance during those times, I like to think. And I think that translated fairly well, especially into the kind of real estate, well, actually the startup world and starting your own company from scratch. It's a tremendous amount of work, as I'm sure many of your listeners know. So I think that at least, if it didn't do anything else, it prepared me for the kind of the hard work and several years of sacrifice that were required before, we kind of started getting traction and things got a little easier.
Did you know what you wanted to do? Did you think that you would have a certain career path? Were you always wanting to become self-sufficient and have your own real estate portfolio? Did you want to be an entrepreneur? Because you've worn many hats. I'm curious, through all these experiences, did you ever have
Yeah.
a certain path or did you just fall into it accidentally?
I wouldn't say I had a set path right from the go. No, I would, I kind of joined the military because I say that during that time, kind of my late teenage years, early 20s, I actually didn't have a lot of direction. I wasn't sure what I wanted to do. I looked at college, kind of different paths, and ended up joining the military, which I have no regrets for. But ultimately, it actually taught me more about what I don't want from life than what I did. I have nothing against the military. Obviously, very thankful for everybody who served. But to make a military career, you have to be a very certain type of individual. And while it taught me a lot, I just knew that this wasn't like something I wanted to do for 20 years. I actually had a lot of kind of creativity in me, a lot of self-starting qualities that were not always welcome in the military, as you may imagine. It's more like, here's what you should be doing. So let's go ahead and get that done. So that's what the military kind of led me to. It was more, an experience that taught me to look at things that I could do on my own, things that I could self-start, things that I could have a big impact in, which I think ultimately did kind of push me in the direction of entrepreneurship, running your own business, because, now looking back, I think this is what I was meant to do, or this was kind of my calling. Is I thrive in environments where I can create something that people want to use, that I could be taking a more of a leadership role, as opposed to just a follower. So I think it definitely pushed me in this direction. As far as real estate, I think real estate is a great investment choice for a lot of people, and that's kind of how I came up to that realization once I started reading about investing and kind of retiring early, generating passive income. It was a very natural choice to get into real estate because I think there's very few other investment vehicles accessible to the most people that can produce such an amount of wealth and passive income in one generation that real estate can.
So walk me through this. You're serving in the military now, and you're realizing that this isn't quite what I want to do with my life. I want to make the next step. I want to be in real estate. So how did that leap actually happen?
So the real estate part was actually always a kind of a side thing for me. It was my way to invest. It was what I did with my spare money, but I never did real estate full time, and I still don't. I think real estate is a great passive investment vehicle if you structure your investments that way. And some people do make it an active thing with flips or wholesale deals. That was just never my thing. So after the military, I actually actually during my time in the military, I got a bachelor's degree in kind of information technology, mostly self-study, as well as some computer classes, some programming classes. Because I knew I was, kind of going to get out after my 6-year contract was up and transition to a career. So I was actually looking for what I'm going to do full time. And I knew that I needed a fairly high paying job to finance my real estate investments because it does tend to be a capital intensive endeavor. So after the military, I actually prepared myself for a career as a software developer. And that's what I transitioned to after the military. I moved back stateside, kind of got out, had a few jobs before I got a nice job as a software engineer. And I was mostly self-taught, but, up to that point, a few college classes, but a lot of it was self-taught. And I really liked that field. And obviously it's a fairly decent paying career path, and that helped me to finance our real estate purchases and really grow our real estate portfolio in those first few years that I got out of the military. And then actually my wife, who I met in the military, also got out.
I see. So being a software developer, I'm sure you've seen it just as I have too. People in real estate have been quite slow to adopt technology and
Yes.
are drowning in spreadsheets. I remember when I sold my company, I wanted to diversify and start also building a real estate portfolio. Wasn't sure how to start, listening to a bunch of podcasts as well and meeting up with mentors. And one of my mentors, I said to him, look, I've got a good deal here. And I sent it to him. And, he replied back with so much information and sent me a spreadsheet. I opened up the spreadsheet. There were so many tabs. And I was first I realized, wow, I clearly need to be more analytical. And I can't believe everything that the agent tells you, because the input they give you makes a big difference in your models. So
Exactly.
That's the state of things today. And why did you decide to build a property analysis platform? And does this problem resonate with you?
Actually, it's funny because I went through almost exactly the same experience. And I do think that even today, it's amazing to me how slow real estate and property tech industry has been just in general for adopting new technology, especially at the individual investor level. We see a lot of, there's been a lot of development with companies like Zillow and all of those in the kind of the home buying market and the consumer real estate market. At least I think there has been progress in the last 10 years or so that I've been following it. But if you actually look into the investor community, which I've been a part of for almost a decade now, so these are kind of your individual property investors that own a small portfolio of rental properties or maybe do a few flips or some wholesale. There's been so little technical development, or rather I should say adoption. It's been pretty amazing to me. And I think there's a lot of factors that kind of contribute that, and we can touch on those certainly. in a bit, but it was actually this realization that caused me to create DealCheck, which is kind of a property analysis platform targeted specifically primarily to individual real estate investors, not enterprise, kind of not big brokerage firms, but specifically your kind of the majority of investors that own property in the United States are just individual, maybe, one person and his wife or spouse. So I went through exactly the same realization. When I was first starting my real estate portfolio, obviously every property you come across, you have to analyze it. If it's a rental, you need to understand what your cash flow will be, your capital required, then all of your returns, the cap rate, cash on cash, return on investment, so forth. They say money in real estate is made when you buy. So if you don't go through the analysis process, you're just kind of throwing money into the wind and hoping it blows in the right direction, I guess. And I did use spreadsheets to begin with, just like I think I got a spreadsheet from some website or maybe somebody sent it to me. I don't quite remember, probably very similar to you. I kind of played around with it, maybe made some adjustments. But after doing this for a few months, maybe like 6 months to a year, I was like, there's got to be a better way to do it. It's just spreadsheets are great for what they do. They're highly customizable, but they kind of start failing, especially when you're analyzing a lot of properties in bulk. Maybe you're doing, a dozen a week. Then all of a sudden you have a copy of the spreadsheet on your computer in a million places. I made a change in one spreadsheet, added some new calculation. Now I have to go and add it in a million other spreadsheets. So for me, it was just getting hard to manage this whole process, but it was a very crucial step in the real estate investment life cycle. So that's where I initially got the idea for building DealCheck. It was more kind of to solve a personal problem, but I knew this problem existed in a lot of other investors that I talked to because they were going through the same pain and the same method. So I actually built the first version of DealCheck. It was just a mobile app back then. I didn't actually have a web version. And it was a very simple, it only did rental properties at first because that was what I was focusing on. And it was a very simple mobile application that I coded myself, using my software development knowledge in probably like 4 or 5 months. It wasn't that long because it was very simple. And to be honest, I did probably everything that they say not to do in startup or business school. I didn't have a business plan. I wasn't very sure what my exact target audience is. I had no monetization strategy, just to be completely honest. I went with, hey, I have this cool idea for a product, so let's just skip all the validation and other steps and let's go ahead and build it, and we'll see where it goes. And I frankly had no, back then it was my first startup or my first ever business or my own product, so to speak. To be honest, I didn't have a lot of expectations for it. I didn't, it was just like something cool, like a side project, you do after work, and maybe it'll work out. So that's actually how DealCheck was born, believe it or not.
So you understood the problem yourself because you
Correct.
experienced the pain. And you telling me at this time you had looked online and there weren't solutions out there that could do what you're doing? Because it sounds hard to believe. I mean, every industry's had technology. Why did you go through the effort of actually building something yourself? Couldn't you have just taken something?
Yeah, well, right. So it's a great question, and I actually did first look at existing solutions, because I needed them for personal use, and I found several things. The first thing that I found is that there was a body of software but it was built specifically for institutional and larger investment firms. So these were your large commercial brokerages, large investment groups, that were kind of doing this professionally. And the software, it seems good. The problem is it costs literally thousands of dollars. I couldn't believe how much it cost. So for me as an individual investor analyzing maybe a dozen properties a week, there was no way I was paying thousands up front or even a month, for some applications to get these analysis features. And then there was a few hobby projects, maybe somebody like me, to be honest, built it, on the side, a quick mobile app, a little online app that kind of did analysis, but you could tell it was, it wasn't really polished. It wasn't, kind of designed for a mass market. Maybe they built it once and kind of just threw it out there and forgot about it. So I almost saw a divide. There was either kind of professional institutional software or these kind of hobby small projects that some of them worked, some of them didn't. There was no platform, that was kind of polished, well executed, accessible, cheap, that could be used for an individual investor. Now, obviously, there was probably some ego involved in my head, thinking that I could develop a platform like this, having absolutely no experience with running a startup on my own software before. But that was at least my line of thinking. I did not find kind of a platform that specifically targeted the individual investor. It was clean. It was well executed. I could use it on my phone, online. And it was, reasonably priced. It wasn't thousands of dollars. It was kind of, what you would pay for apps like Evernote or something like that a regular investor with kind of a normal, budget could afford.
So you were your own customer. When did you realize that this is a business versus this is a tool I'm building to be more efficient as a real estate investor? That leap where it went from let me be more productive to actually let me try to commercialize this and turn this into an actual startup solving the needs of a big part of the market.
Yeah, it was definitely a process. And for me, it evolved slow. I would say probably the first year or so, I kept working on it on the side, adding a few little features. And I did release it. Again, it was a mobile app, so I released it to the App Store. And it did get some usage, but it was nothing crazy. It was mostly probably me, some friends, family that I sent it to, some of my investor colleagues. But kind of after, it's been out there for about a year or so, I was improving the feature set. I was adding more features. Slowly but surely, I started seeing traction. The downloads were starting to go up. The app reviews were coming in. And this is without me really doing any sort of marketing, advertising, obviously none of that. So I'm not sure exactly when I had the epiphany or the realization. I think it was just a combination of, kind of seeing this product evolve and actually getting that early feedback from the people that were using this, that were overwhelmingly coming back and saying, hey, this is an awesome product. I just, wish you added, a couple more features, and then I think this would be the perfect app. Or, I can't believe nobody has built anything like this. You should really keep working on it. So I think what really drove me was the customer feedback. It was not the number of downloads or reviews, but just kind of the overwhelming feeling that I was getting. Hey, this was actually helping people. This was solving a problem. And I think I could reach, instead of, thousands of people downloading, it could be tens or hundreds of thousands. And then at that point, I kind of began to formalize it in my head. Then, hey, let's look at this as an actual viable product that we can properly monetize, market, and improve to reach a broader audience.
And I understand you've crossed that big milestone now. You've already broken through 100,000 users. Is that right? And what's next?
We did. Once I kind of made that realization, especially in the last couple of years where we expanded our team, implemented proper monetization, marketing, basically, kind of filling in the blanks where we were lacking, because I really just started with just the product. I would say DealCheck, exploded in popularity. It's not kind of the growth that you may see in a business to consumer startup in some other segments, because it is a very niche product specifically to individual real estate investors. But taking into account the size of the market, I think we've seen tremendous growth. And yeah, we actually crossed 120,000 users here recently, and it's growing, double digits very steadily, kind of across rental investors, flippers, wholesalers, a very wide spectrum with overwhelming feedback. So I don't think we're planning any drastic changes at this point. We're actually just continuing with exactly our mission plan that was formulated a few years ago, which is provide the best, most accessible platform for individual investor to analyze any investment property in kind of seconds. So that's our motto, so to speak, our mission statement. So there's still quite a few features and enhancements we like to add, because we really want DealCheck to be, kind of the go-to place where you can do all of your due diligence analysis. So that means not just kind of the core number calculating that it started with, but now it supports features like automatic data import and sales comps and rental comps, and a purchase offer, a max offer calculator, reports, sharing. So basically a full suite of tools that a person doesn't have to go to Excel or go to even Rent-A-Meter or go to any other app to kind of put together the pieces of the data that they need to fully evaluate, analyze, and make a decision on an investment property. We want it all to be done in one simple, elegant interface, mobile or web. And I know we still have quite a bit of ways to go to kind of fully realize our vision statement, although as kind of shown by our usage, it's definitely working. We're definitely on our way there.
Anton, how have you been able to finance the company to date and to grow it, to dedicate time to it? How have you divided your efforts between real estate investing, which is also a way to generate revenue and income, versus your own startup now?
So DealCheck actually is still fully self and a little private funded, but mostly self-funded by myself and then a few kind of friends and family. So we never had a public round or any larger investment round. And I've always adapted a kind of a very, very lean philosophy. So we work hard to minimize expenses. Our biggest expenses is payroll and kind of supporting our employees by far, but everything else would.
Right now,
we're at five people team, so still a very small team, but the company is profitable. We're generating, so decent revenue, I think, for our size. So it's kind of financed. We financed our own growth, and we especially focused on running very lean through automation, kind of leveraging existing technologies for things like customer support and low-cost marketing. And we actually have a very, very small budget. And I know that, kind of in the startup world, probably, in the circles that you hang out, this may be a big no-no. And we could have grown 100 times faster have we taken on capital, investor funding, and perhaps that is the case. I just chose not to do this, at least at this stage in our growth, because I like how we're growing. I like that we're still very cognizant of kind of the processes that we have in the company. We're able to manage them effectively, instead of scaling to 1 million users and all of a sudden we're overwhelmed with kind of every channel of our company. And at the same time, I feel like we also have the time, the resources to really still listen to customer feedback, individual customer feedback. I still sometimes get on the phone and talk with individual DealCheck users to help understand, what it is they want from the software, how can we improve it. And I think this relentless focus on kind of product improvement, very much driven by the user, is really paying off in our strategy. And I'd rather have that, focus on the customer, focus on the feedback, than have 100 times faster growth, at least at this stage. It's perhaps a few years from now we may look at reaching even a broader audience, and maybe take on some funding to help us get there. But at this stage, I think we're in a very good place in terms of product market fit and our kind of market share in the global kind of in the US property analysis market. So
yeah, and so
keep on trucking.
I'm absolutely torn. The entrepreneur inside me absolutely resonates with what you're saying. You don't need to go raise a ton of VC funding. You should be there on the front lines talking to customers. I know many entrepreneurs firsthand who still talk to customers on a daily basis. And it's a hallmark I've seen of successful entrepreneurs. I used to annoy the co-founders of Lyft, the ride-sharing app, even after they raised funding. They would still respond to my text messages complaining about the service I had or whatever. And
That's
those are
awesome.
the companies that are really, really resilient because they're focused around customers and loyalty. But then there's the VC side of me that sees so much disruption ahead, so much change. And we're living in a very interesting time right now with data. If you could infuse more data into your platform, if you could apply more machine learning, take artificial intelligence, have predictive analysis, you could go and even build your own real estate fund. You could go and become one of the big private equity acquirers yourself. So, there's so much you can do, but good things last. And I think the best companies, even Fortune 500 companies, are the ones that grow slowly and sustainably rather than get rich quick, die fast, up and downs. And there is such a thing as having too much money and the pressures you get by taking venture capital and being beholden to the investor requirements, basically. So I'm sure you've thought a lot about that. Let's talk about AI and data then. So we're living in a fascinating time. You are a startup that's fully about data and allowing the user to use that data intelligently. Where do you think things are going to go with regards to the availability of data in prop tech? And specifically for DealCheck, what are some of the major breakthrough areas you see that data can do for folks like yourself in property analysis?
The biggest, I would say, one of the biggest bottlenecks that I've always seen, and we've encountered this with DealCheck, is actually the MLS system in the United States. You're probably familiar. It's an archaic,
Yes.
decade-old system. Not only that, but it's segmented into states, cities, little municipalities with their own kind of data center, their own formatting, their own data control. And if you're building an application, for example, like DealCheck that needs to work nationwide and needs access to the data, it's an absolute nightmare. And especially if you are trying to go get this data from each individual MLS, that for a company of our size, that's basically impossible. So we would have to rely on some sort of aggregate data provider, another company, for example, similar to Zillow, that aggregates all this data and has the resources to pull it into one centralized data source. So if I was to name one kind of disruption or one big trend that I personally would like to see in the property tech industry, even though I may not be able to, help with our DealCheck platform, it would be to somehow centralize, or I would say abolish the MLS system. I mean, some agents are probably out there listening, screaming to me, but I don't really see a big need for it. I don't see why kind of the property market can't be more transparent. I don't see why you need an agent license to access, listings on the MLS or any of that. I think that whole framework, that whole system can be unified, centralized in one. And I frankly think that data should be free. It should be not only free, but publicly accessible. You should be able to go and look on the MLS, in San Francisco, and I should be able to look in San Diego, because there's just no reason why. It's probably, there's probably some money involved for the agents and the licensing certifications, and you got to be a licensed agent to get access to our data. But to me, that's kind of the old way of doing things. And I think you will really see a lot of companies kind of sprout forth in the property tech industry and be able to do really cool things, like you said, with machine learning, data analytics. If this, because MLS to me is like one of the fundamental data sources in real estate. It's where all the listings are. It's where historic sales are. It's kind of the, some of the original data that you need to perform downstream calculation, like predicting price trends or doing property analysis like we're doing. So that's probably one area where I would really like to see forth. So, if you and your venture capitalist friends are looking to invest, man, I would say if there is a startup out there that is focusing on kind of aggregating or getting rid of or replacing the MLS system in America to make this data accessible, either free or extremely low cost for everybody else, I would be all behind that, because it's been just such a pain from my experience building DealCheck, but also from my experience with investing in real estate. If I want to look at properties in Atlanta that are actually listed on the MLS, I need to go and contact an agent or get my own license. And to me, that's just crazy for the 21st century, if you
This is
ask
the
me.
hallmark of what makes um, for such an opportunity for disruption when you've got one large legacy player that's almost created an institution, right?
Exactly.
Where people have to follow these archaic rituals and tools. It reminds me, although the taxi industry was more fragmented, but we had the taxi industry that was so powerful. In the health industry, you have Epic, which is sort of the big database that people and hospitals use. And although they're much more progressive than something like the MLS, though it surprises me that we still are here in 2020 and we're talking about this problem. In San Francisco, we've taken a bit of an interesting step where off-market listings on the residential sides are banned. You now have to list them on MLS. You can't market a property offline. So if anything, MLS is becoming even more and more entrenched and powerful with the agents. In the advertising industry that I came from when we disrupted that, the agents had a lot of power. And I've seen companies like even the Trade Desk that have come in and have really displaced that. The Trade Desk now is worth tens of billions. And
Right.
there will be a huge deca-billion-dollar company in prop tech that can solve this problem. I think the way you're going naturally will get you there. It's like how Uber has focused on the need of the user, right? Eventually the user
Exactly.
Uber, and if you can become the platform, the portal through which real estate developers do their property analysis. And by the way, in real estate, as you said, you make your money before you buy. So if you can be the tool they use, they'll naturally drag you everywhere. The question I have for you is, there's so much you can do right now. You could expand globally. You don't just have to focus on the US market. You could go upstream to larger institutional clients. How do you remain focused? How do you remain so true to your vision when there's just all these opportunities you can go after?
So I think I'll come back to what I said earlier, which is having a very relentless focus on the customer needs and the customer suggestions. So instead of me coming up with ideas, basically, like you said, or maybe I read them somewhere, I just look at the market. I think that's good. I think that a founder of a startup should have a vision, and maybe if there's other verticals or horizontal expansions he wants to get rid of, that's great. But I think it's very important to also have a good sense of what the customers are using your platform for and where they would like your platform to go. And I think that's very hard to do if you don't have proper tracking of customer features, customer suggestions. So we've actually implemented at DealCheck a very kind of methodical way of tracking customer feature requests. There's apps you can use for this. We kind of have an internal tool that we've built fairly quickly. Every feature request that comes in from a customer is documented and basically upvoted. So if there's a ton of people asking for feature A, we will see that. We'll kind of basically see trends. So it's important, not just it's great if you talk to customers, you get their feature requests, but once we've actually implemented an actual tracking system for tracking these, and some of these are small feature requests that we can just throw in a release, and some of these are very big ideas that our customers have that we can kind of see through what they're saying. Hey, they actually have this kind of much bigger expansion idea for our platform. So we take notes on all that, we record it, and we look over this list at our internal product meetings, or if we're just talking about a vision to a company a lot. And we use that combined with where we want to see our company go ourselves to actually make our decisions. Whereas I feel like, a lot of companies that I've personally seen grow into maybe not the right areas. I think they were too focused on where the founder or the board, wants the company pushed, but that may not resonate well with their audience, or maybe they just, there's a mismatch basically. And we've tried to incorporate both the vision that I have, that other people at our company have, as well as the actual, what the customer's telling us they want. And we combine that to kind of shape the direction of our product development, and kind of major feature releases, because we don't want to just add some cool feature because we think it's going to be cool without any testing, or, without kind of any understanding if it's even going to be used. But we don't also blindly just do what our customers tell us. We analyze both together. We see kind of the trends and the thinking of our customers, combine that with our own ideas. And I think so far that has really created a good internal process that we follow to shape our, at least, kind of near-term product roadmap, and deliver, and we release features and we get hundreds of emails saying like, man, you guys added exactly what I asked for, or man, this is awesome. I always wish DealCheck did this. So it's just kind of, we're getting that feedback loop complete that, hey, we're actually adding meaningful features, meaningful developments to our software that our customers appreciate. And that's just kind of telling us that, hey, I think we're doing the right thing here.
Yeah, especially at the stage you're at, product market fit is so essential, and even cementing yourself, making yourself even more customer focused is key. A lot of the entrepreneurs I advise, or I'm an investor in actually, face the same challenge, especially as they grow. And as a CEO, they naturally have to step back now because it's no longer 5 people. Now it's 20 people,
Right.
It's 50 people, then 100 people. And I like the idea that you have about implementing systems and processes early on. I remember early on when I was running Vongel, it literally was, a customer wants this, let's build that out. Engineer would come in and engineer would talk to the customer directly, literally build out what they want. That does not scale.
Right.
When you have hundreds of thousands of customers, and you have a team of developers around the world. We had hundreds of employees at Vongel, and that was something that was a challenge because we didn't build process early on with product, and that was a regret. So I'm glad to see you're using that right now. The other thing you touched on that I think is really important is having a roadmap, but also when you get customer feedback, making sure that you're not just building for one customer. It's strategic. It's strategic.
Exactly.
If this is a feature one customer wants, is it just specific to that one customer, or is this a feature that will be useful across the entire customer base? Some of your customers are squeaky wheels. They will put something forwards that probably other people also feel a pain point with, especially the ones that you've built a relationship with as a founder. And that's very important when you identify one problem and can sort of extrapolate and see this is a problem, maybe 5 to 10% of the user base actually has, and it's going to grow. So very, very happy to see you're doing that. Anton, do you have any questions for me as a PropTech VC or as an entrepreneur as well? Any challenges you're trying to work through, or any questions you have about running a company that I can help you think through?
I would actually be curious to hear your answer to the same question that you asked me about where you see the biggest opportunities in the property tech industry, or where you see, kind of the most ripe aspects of the disruption, and maybe specifically, around the investor market, not so much as the kind of the individual home buyer market.
You mean as an institutional investor buying private equity real estate, or do you mean as
well, no, I would actually just kind of, since you yes. Obviously you have a fund for property tech companies, you talk to a lot of CEOs, a lot of companies in the space. I'm just curious what your general thoughts are on, where would you see the trends in the property tech? Where do you think the most disruption might happen? What I meant by investors is specifically kind of focusing on the, on the real estate investor market. Could be institutional, could be individual. Yeah. As opposed to just like Zillow targeting home buyers.
Right. Zillow is an iBuyer, which by the way, I do like that model too.
Yeah.
See where they'll go. So look, I've set up a PropTech VC fund because there's just so much opportunity throughout PropTech. I think the area you're in right now with property acquisition is very interesting. And you're focusing obviously on the smaller investor. It's very difficult if you're a private equity fund. So I also am a partner in a private equity fund called Bluefield Capital. We've bought about $1.5 billion worth of real estate over the last 6 years. And there aren't really a lot of tools and technologies that help you here as well. I think a big opportunity is actually for the private equity funds themselves to build a lot of data and go out and acquire at large scale. I think I've seen one fund emerge called Skyline, and they are quite difficult to figure out exactly how they work. It's sort of a black box. But their pitch is basically, we're a private equity fund. We have cutting edge AI. We are able to analyze the market, pull data from so many sources, and basically use machine learning to bid on properties. And I do think there's promise in that. I actually think it's a pitch right now. I don't think it's actually concrete enough. But you've got to understand my background. See, I founded Vungle, and Vungle was all about helping developers buy users. So in the advertising industry at the time when I started Vungle, people were buying on a per view basis. We'll put a video ad out there and we'll pay per view. There was no focus on performance. I'm a huge believer that you need to use AI and you need to focus on performance. So with Vungle, we flipped the model on the head. We actually changed the pricing model where it would be about buying users. I don't care how much you spend on a view. I don't care how much you spend on a click. I'm going to build a product for you that if your user is worth $10, you can spend $7 on our platform to buy that user. Doesn't matter how many views or how much the views cost. The view could cost you $20. It doesn't matter. If the user makes you more than that, that's the key. I actually think that approach can be really powerful in real estate. Right now, it's the huge hundreds of billions of dollars under management type of firms that have real technology. You're talking about the Blackstones, you're talking about the KKRs. Those institutional investors have built technology internally. There is this big gap in the market with private equity investors. Most of the private equity investors still today run their entire business on spreadsheets. It's crazy. Yeah. Just on spreadsheets. They're not even using tools like you're using. And those guys are seeing so much value in what they do. They don't need to. There's no push right now. There's nothing pushing them to go and invest in building technology infrastructure. So when I joined forces with Bluefield Capital, the opportunity for me was very exciting as a tech entrepreneur to join a private equity fund, bring technology to real estate and just explode it with opportunity. So I'm actually implementing this model right now where there's no single one area, but there's a huge spectrum of areas. So what we do is with this VC fund we've set up is we invest in startups that can improve the NOI of our actual portfolio. If we can bring in technology and we can improve even rents by a few dollars, that has a big impact to the bottom line. And if we can improve that on one unit, wow, we can scale that out across our entire portfolio of thousands of units. And we have other partners too we invest with that have tens of thousands of units under control, under management. So the first opportunity is any technology that can increase NOI, net operating income in a property is great. Right now, it's pretty much a tick box for everyone. I'm sure you do this on your platform too, right? Especially with the BIR model. Buy this property, rehab it a little bit, bring in new countertops, and improve the rents a little bit, do some landscaping, do some interior design or whatever, you can improve things. Well, there's new technologies that are emerging that can do a lot more than that. There's a few things we're looking at right now too, that could really boost the NOI of a property, especially with shared services. So that's one. And then, like I said, with deal analysis, I think that's a huge opportunity, especially for the large PE funds. If they can take their technology and be more efficient at buying and bidding, that would be very, very powerful. Another big trend that I see now is with coronavirus, and I'm curious to see if there's been any shift in how DealCheck.io is doing things. But with COVID happening, it's forcing the industry to adapt. Every segment of real estate has been hammered since COVID has come in. Even multifamily, you can't necessarily have in-person tours anymore. So people are now suddenly adopting 3D virtual tours. People are building CRMs now. People are actually really investing in infrastructure there. Retail is, who knows how retail is going to bounce back. Office we're investing in a company that is focused on contactless technology, where you can enter an office building just through facial recognition, having a device. In just zero point 0.2 seconds, they can let you in, and they can also scan your temperature. And companies right now are scrambling to figure out, how do we comply with social distancing regulations, and how do we make sure our environment is safe? So a huge spectrum of opportunities, which is why I've also started this show as well, to bring on interesting startups. So on that note, I'm curious, COVID-19, I mean, the big, I wouldn't say gorilla in the room, the tiny microscopic, bacteria, virus floating around. What impact is that having on DealCheck's customer base?
We were actually surprised by how much investor activity picked up in the last couple months. So we we're kind of seeing steady growth up until March, up until the virus kind of took hold in the United States. And then there was a period of March, April where our growth was a little slower, and we kind of saw less people analyzing properties, which I thought was going to continue, actually, because I wasn't sure exactly how long this was going to last. But then right after the lockdowns ended in most states, June, July, our kind of activity and usage exploded, actually. And I was very surprised. What that was telling me is that there is, I'm not sure exactly how the individual home buyer market has recovered, but as far as investors, there are a lot of people looking for undervalued properties and opportunities right now. There's probably going to be a wave of foreclosures, or just inventory sitting around not getting bought, especially for kind of single family markets. And at least from what I've seen and what I can derive from the usage of DealCheck, is there's a lot of appetite from investors to pick up properties because they either expect prices to drop, or this would be a good time to buy. And we were very surprised. I actually thought we were about to go into a slug for quite a few months, until things settle down. But based on what I've seen, there is a lot of demand, at least from investors.
We're seeing that too, especially on the private equity side. I mean, I've got my own family office where we have 400 units that we own directly, and then thousands of units through syndications and JVs and things we've set up. And then on the Bluefield side too, we're buying real estate. We're surprised at how much people are willing to pay. And I'm trying to develop my view of where the market is heading. I don't know if it's FOMO right now. I don't know, because the stock markets have recovered so much, the craziest decline and bounce in history, that's created this capital where people are willing to pile into real estate. Whether real estate is a safe haven right now, are you seeing prices across the board increase, or are you just seeing usage and volume increase? Or are you actually seeing prices increase too?
No, I wouldn't say we're seeing a lot of price increase. We're specifically seeing a lot of kind of usage and activity. So I'm not sure, and I've kind of looked at our own portfolio of properties. I definitely don't think the real estate, prices kind of skydived or anything like that. It's hard to say, with real estate, everything is a little delayed where prices are going to go for the rest of the year. I would be surprised if there would be a big drop. If anything, I would expect kind of a plateau to modest increase. It's at least from my understanding, looking at our own portfolio and just kind of sales trends.
For someone who's got excess capital sitting on the sidelines right now, is now the buying opportunity of a lifetime? Is now a time to be cautious and careful? How do you view the opportunities for individual real estate investors?
Well, to be quite honest with you, I was never a big believer in timing the market, especially for real estate. If I had friends and family that were asking me, hey, is this a good time to buy? I would usually say yes. It's better to buy than just to sit around. So if somebody asked me that question today, do I think this is an opportunity of a lifetime? Probably not. I don't think the real estate prices have dropped significantly in the last few months. But is this a good time to buy? I would probably say yes. I generally tend to have a long-term outlook on real estate purchases. So if you're buying for private wealth building or cash flow with kind of a time horizon of 10, 20 years, maybe never selling these properties, yes, I do think right now is a good time to buy. But so was it last year, frankly. But that might be a little different than your philosophy with, the private funds where you might have a little more turnover of your assets. I kind of tend to have a more long-term
Yeah, I think
outlook.
I think it's very dependent on location and also the asset class. And multifamily, I think, is an absolutely solid investment opportunity. However, I question multifamily within certain hot sectors, locations like San Francisco, for example. I have my own portfolio here as
Yes.
family rentals, and I am seeing units take forever to get filled up with occupancy rates pretty low. I'm seeing rents drop a lot for single family, one bedrooms and studios. Prices for larger units somehow are increasing, maybe because, there aren't enough of them. But other asset classes like office and retail are in danger, and then office assets like warehouses that we're also investors in are just really, really strong. What's your thoughts on this fact? I mean, I'm here in San Francisco right now, and it's quiet. I have so many friends that are leaving this city, going to other places. And part of this is spurred by an affordability crisis. Part of this is spurred by the work from home movement with tech companies like Twitter now saying permanently you can work from home. Are we going to see price declines in hotspots like tech cities like SF and maybe even places like New York and London and Austin? I mean, what's your thoughts on that?
I definitely think there's something to it. And, I've read a lot. I've been seeing that a lot. Basically, migration of the population, especially kind of, the younger generations out of these hot cities and into maybe secondary markets as they were up until then, even more to the suburban areas, just away from city centers. Because I think, kind of historically in the last few years, especially in, if you're any kind of career oriented in finance or tech, it was very profitable for you or very good to move into a city center at New York, San Francisco, other places. And I do think that it makes sense that the landscape has shifted dramatically because of COVID specifically. And we will see at least some population leaving these areas, maybe moving into secondary markets, companies maybe even moving headquarters. There's a lot of, I've seen talk about even San Francisco companies moving to places like Texas and Atlanta. And obviously that will have...
Tesla just announced too that they're moving across to Texas. So
yeah.
That's a place where there's a lot of outflow for sure from SF to places like that.
Yeah, it's a lot of Californians in general are leaving to other places. I would imagine it was probably happening with New York and the East Coast populous centers as well. So that will definitely have an impact on prices, on rents. Less demand, kind of the most basic driver of prices is the demand is going to go down. And you will see, declines in those markets. And kind of back to your earlier comment about, investing now versus later. I'm always to clarify that, I think investing, when you have capital as opposed to waiting is usually, in your best interest. But I do agree with you that investing in San Francisco may not be the same as investing in Kansas City. It is very important to understand your local market or the market that you're investing, as well as the asset class. So, just because I think it's a good time to invest doesn't mean it's a good time to invest in absolutely every market. It's very important, and for somebody like me, me and my wife, we own rentals across 4 states. So we've, stopped buying in California a long time ago because I just think the market here is overpriced. And it just does not have the fundamentals that we were looking for. So it's important to understand your asset class, your market, and if that aligns with specifically what your goals are for buying real estate. But I do think at any given time you will find a market across the United States that will fit your goals. And now with kind of globalization and tools like DealCheck making it easier and more accessible to invest out of state where you don't necessarily live, it's kind of no excuse not to do that.
For sure. Look, it's been a pleasure speaking with you. I am very eager to see what you guys do next and to keep a tab on what you guys are doing. Great job. You should be very proud of the fact that you still retain control of your company, you bootstrapped it, and you've done it the right way, which is focusing on customers. So great job.
Well, thank you, Zain. I really appreciate it. It was a pleasure speaking with you.
Want to take your business to the next level? You're in the right place. Zain Jaffer interviews legendary entrepreneurs, investors, and leading executives. Gain deeper clarity, insight, and motivation, and achieve more in your life, both professionally and beyond. Zain sold his Silicon Valley startup Vungle to Blackstone for a whopping $780 million in 2019. Now, his purpose is bringing you the very best business advice, and he leaves no stone unturned.